Hey traders, checking in on the stock market today. Sideways to start the day with significant volatility favoring the bears into the close. We knew to be watching for volatility from the video yesterday because of the inside bar and how docile yesterday was. I'm going to show you a couple different scenarios as to how this pullback can take shape from here. Ideal bull scenario, ideal bear scenario, and in between. So SPY started the day rejecting from the high of yesterday first thing. Aggressive bears had a top fishing play off of that resistance level, and we closed at the low of the day. There was a gap down to 412.35. That has filled. So keep it simple. We've got our all-time high, our low of the pullback, our lower high, and we're watching for a higher low. What would be a scenario where we can drop to a lower low? We would need increasing bear volume for that to happen, in my opinion. If we do not see increasing bear volume, we scout a daily higher low compared to 404 and a tightening range into next week. We got 3 more trading days to go. If we confirm this daily downtrend, it'll be the most convincing daily downtrend confirmation that we've seen since February. We will then zoom out and weekly consolidation will be continuing, and we'll be watching very closely because if that confirms, we likely lose the weekly EMA 12 support for the first time in 5 months. That will be notable as well if it happens. Key daily support level, line in the sand. Bulls need to regain the hourly trend in their favor before breaking 404 support. And that support is 2% away, and in extended hours, we're even a bit closer to it, $7. Nasdaq 100, the futures chart, just confirmed a 4-hour bear break. And looking at the S&P 500 futures as well, there were just clear resistance levels to be watching as far as double tops. 4-hour time frame, healthy consolidation yesterday, failed to break resistance. We double topped and then we confirmed a bear break on the 4-hour. And again, we were watching for the potential of a 12-hour equilibrium, but I like the daily time frame on SPY for clarity at this point. Nasdaq 100, 4 hours, same thing. Failed to break resistance, and here we are. I'd still consider this a double bottom, but we are, at the moment, just barely breaking our support. So we look at QQQ. Daily lower high is set right off of EMA 12 resistance. We're looking down at 321.45, which is being tested in extended hours. And after 321.45, it is right back to the low of 316. Can we break 316 and see another leg down? Absolutely. We already did it once. There's nothing saying that we cannot do that again. Again, watch the volume. Increasing bear volume increases the probabilities that we are going to break that support level of 316. The bulls would have to hold 316 and break 327.33 to confirm a daily trend change back to the bulls. That is their only hope for shifting this momentum in their favor and setting a weekly higher low. XLF, we'll skip IWM for now. XLF, daily lower high is set. We broke resistance, but then the bears took control pretty significantly right after. And as soon as you break resistance, set a low of the day, chop around on a 5-minute equilibrium, as soon as that new low of the day hits, I start to get a bit cautious, and I actually entered an FAZ position this afternoon. Definitely a little bit late, but better late than never. Entered it around here for just further hedge exposure. It's a very clear low-risk play. If I'm going to top fish the all-time high, I'm not risking a whole lot. So I still have SQQQ, which I have not sold at any point over the last couple weeks. And again, the daily trend is my guide on that position. And I'm not selling it because every bounce, we're just looking for a lower high. If we set up a daily trend change, I will look to exit that position. But if we don't, I'm just going to keep riding it on the daily downtrend. I now have an FAZ position because of this top fishing play. So I have shifted my exposure bearish today by adding FAZ. So how can this play out? A couple ways. We hold a low of key support 36.54 and see a new all-time high, keeping the daily uptrend going. We pull back, don't break support, but form a little equilibrium into next week. Or we bear break, lose the daily uptrend, which would be very notable for me. Increasing bear volume will need to happen if we're going to break 36.55 from here. I'm very cautious. I don't really play the financial sector bullish. I'm watching bearish because of this monthly chart. Again, when you go 1, 2, 3, 4, 5, 6, 7, 8 months since your last monthly consolidation, we know monthly consolidation should be anticipated at any point. confirming a daily downtrend is baby step number 1 for monthly consolidation. We will just be looking for a weekly high or low if we confirm the daily downtrend. We'll be watching the EMA 12 on the weekly, which has been holding for 5 weeks, just like SPY. But confirming the daily downtrend is step number 1 for potential monthly consolidation. And again, just getting some exposure there because I know monthly consolidation is due and positioning myself for that possibility. So let's just look at these 3 things: SPY, QQQ, and XLF. And then we'll go into our normal technical analysis because this is going to determine what kind of pullback we see into next week. Scenario number 1, ideal bear scenario. Increasing bear volume across the board, bear break of QQQ to a daily lower low, bear break for XLF to confirm the daily downtrend. If that happens, we have a lot of momentum to the downside, and SPY will likely see some of its most significant pullback that we've seen, perhaps comparable to that little 3-day drop. But if that happens, that's a big win for the bears. Scenario number 2, everybody holds their higher lows, and we tighten up into next week. And scenario number 3 is, well, there's 4 scenarios. Scenario number 3 is everybody holds support with a complete 180 turnaround after complete bear momentum controlling the end of today, and either tomorrow or Friday, or tomorrow or Thursday, I should say, complete bull turnaround to set a higher low and try and change the daily trend bullish. And the best case for the bulls would obviously be XLF continue to hold the daily uptrend, QQQ change the daily uptrend back to the bulls. Scenario 4, QQQ changes the daily trend bullish while XLF changes the daily trend bearish, which would be in line with our inverse relationship that we've seen many times between these sectors, and that would keep the broader market choppy, but it would keep the weekly consolidation healthy if QQQ can change the daily trend bullish. So you either have all sectors doing the same thing bearish, all sectors doing the same thing bullish, or a split, half and half. And XLV is not doing a whole lot on its own. It is an important factor, but it's right in the middle of its daily range. And I look to XLV to be a tiebreaker because oftentimes QQQ and XLF are directly offsetting each other, and it's the direction that XLV is leaning which gives you the direction that SPY is leaning. And we'll be watching the same thing. It's a very similar setup right now. And if we confirm the daily head and shoulders pattern and break 121.61, that would be another big point in favor of the bears. So I am very cautious. The cryptocurrency space has been pulling back for a month at this point now. And if we see that translate into broader market, now not that cryptocurrency would be the reason for it, but just the shift from euphoria back into bears having some control. And the bears have had control of the tech sector, and they've had control of our growth names. They have not had control of healthcare, energy, or financial sector in the last few months. And we're watching very closely as to whether money is leaving the market or whether money is rotating around into other sectors. And if QQQ changes the daily trend bullish, while money leaves XLF, that shows us rotation. I have a bear lean until bulls prove to me that the QQQ bulls can change the daily trend back in their favor. IWM, daily top of the bounce looks set. If the low of today breaks tomorrow, that will be the case. Bulls have a good amount of space to form a higher low compared to 211.54, but we will have to confirm a daily trend change back to the bulls if we are going to see a shift in this momentum. Bigger picture. Burden of proof is on the bulls for QQQ, it's on the bulls for IWM, it's on the bears for XLV, and it's on the bears for XLF, and it's on the bears for SPY. So XLV, potential head and shoulders, a break of 124 would decrease that probability a good bit. Bulls were out today, but they lost it into the end of the day as we saw broader market fear hit all markets into the close. I should say all sectors into the close. Biotech sector. This morning started out with clear strength in our growth names comparative to QQQ. We saw Tesla bullish correlation, XBI bullish correlation, ARKK bullish correlation, and I'm sure there were a handful of other names, PLTR, all had bullish correlation with QQQ. If we are watching for rotation, that is a big flashing sign for us. One day doesn't do it, but we want to see if that can consistently start to be the pattern. Today had it, but by the end of the day, obviously a lot of that momentum was erased with broader market weakness. We still held on a lot better XBI was green, ARKK was green. You know, the growth names were green while we closed at the low of the day and weak in our other major sectors. But again, if we see a fear scenario, ideal bear scenario, growth names will likely get hit as well. We will need to see, in my opinion, the ideal scenario for rotation into growth would be XLF losing the daily uptrend, QQQ confirming a daily trend change to the bulls, and seeing the growth names outperform QQQ on that trend change. There's a lot to keep track of, huh? So XBI, if we break the low of today, tomorrow, 126.44, daily consolidation is underway, and it is up to the bulls to hold 119.98 to try and set a little daily higher low. But overall, bigger picture, bears certainly still have control. We've got a nice downtrend resistance line, which we rejected from just under today. And we do have a falling wedge support line to be keeping an eye on. But again, bulls have the burden of proof, and they're not proving a whole lot at this point. If we drop down, I'm going to keep an eye on this falling wedge. But bulls won't be proving it. Not a very impressive bounce, bigger picture. Zoom out to the weekly chart. Just a weekly lower high, anything under 140.88. Semiconductors. So bear day today on a gap up open. But again, holding on a little bit better. We've got support at 226.84 and then 222.82. And again, what stands out are the lower highs on these bounces. Daily EMA 12. So bears do still have control, and we'll need to see the bulls get over daily EMA 12 and get over the top of this bounce if we're going to see any bounce follow through. Solar. So again, started strong today. Easily the highest price that we've seen in the last week, but closed with an upper wick into the close. Still an hourly uptrend on a lot of these growth names, and we will have to see QQQ bounce tomorrow if they're going to hold on to these hourly uptrends. Overall, bear flag still in play as long as the daily EMA 12 is resistance. MSOS, not a whole lot went on. Uneventful the last couple of days. I'm going to be pretty quick to cut CURLF and TCNNF, my small USMJ positions, if we roll back over towards our lows. And again, the positions that I have right now, just so we're on the same page, I've got SQQQ and FAZ as my bears, and I've got GLD, SLV, SPY, ARKK, half position left, with a break even of 95, so I'm just going to let that play out. And those MSOS, those USMJ plays. So overall, it's been really good to have that balance because the metals have continued to go up. When I first started to build my hedge position, the metals were directly correlated with SPY. And if SPY went down, that meant metals went down. But the metals have done a good job the last couple of days breaking out, and that has kept swing positions profitable each night, because even if I'm, balanced bull and bear, metals being more bullish has helped out. The VIX, solid bull move, holding the low of 1870. Still a pattern of a lower high each of the past few days. Bulls will need to get over 2160. Then we'll watch for a lower high compared to 2890 unless all of our sectors drop at the same time and break those support levels in our ideal bear scenario. You're not going to see the VIX break this high on this move at 2890 unless that happens, in my opinion. The dollar, all bears. Keep it simple. Daily downtrend. It's all I care about. Next time we bounce, anything under 90.91 is just a lower high. Bears continue to have complete control. And the metals are enjoying that. Breakout on the daily continues. 4-hour bull flag on gold is forming. No red flags. 1875 is a double top. If we break 1875, we're looking at 1900. Daily and 4-hour uptrend. Silver pulled back more than gold on the 4-hour chart. It's not a potential 4-hour bull flag, but it is still an uptrend, trying to hold the EMA 12. I guess you could still call it a bull flag, but certainly not nearly as confident. If we see a loss of the 4-hour uptrend, we watch for a daily high or low, plenty of space for the bulls. Miners, double top with the high of yesterday, first thing. Pulled back notably, but just an hourly high or low. 39.03 is now our hourly high or low after not setting one yesterday. we would have to fail the high of today and break 39.03 to confirm an hourly downtrend, and then we would zoom out and scout a daily higher low if the bears take over in the short term. Oil, rejection from resistance, broadening wedge on the 4-hour time frame continues to play out. And again, when I lack clarity on the daily time frame or any time frame, it's usually a broadening wedge. The support line was clear. The resistance line is now more clear. When I drew it yesterday, it was a little bit lower. But with our new top, unable to break the high of 67.29, and there was nuclear news that led to this drop, but it's a clear 4-hour broadening wedge to be paying attention to. Next time we bounce on the 4-hour, we're going to scout a lower high compared to 67. Natural gas, significant pullback today as well after the significant bull break yesterday. 4-hour, still an uptrend technically, but we will be scouting a 4-hour lower high to be the result of the next bounce. Daily chart, notable pullback, and daily EMA 12 is our short-term guide over the last few weeks. So it is crunch time for the bears. Are the bears going to prove it over the next couple of days? Very key daily supports to be watching. And if we set daily higher lows and change hourly trends back to the bulls, I will exit my FAZ and I will shift my lean back to the bulls. But for now, on the bearish side of things, after how today ended. And today was just, boring initially, but look at this QQQ equilibrium, where we just had a low of the day, high of the day, higher low, lower high, higher low, lower high. The bear break took place. We confirmed a 5-minute bear flag, and then it was just complete bear takeover from there. So this is the kind of chart where you need one trade. If you're stalking this, and obviously this one has notable follow through, they don't always have this kind of follow through, but there's your one trade to make your day. And just seeing the very clear equilibrium and buying the break one direction or the other. So trades I took today, I was decently active today. In the end, didn't end up being an eventful day. Green, which is nice, but still sticking with the base hits over the past couple of days, which is A-okay with me. Let's see. First one was Tesla. So I'm recognizing a bullish correlation between Tesla and QQQ, and I'm watching for a 15-minute bull flag. Right here. So I'm watching that consolidation on the 2-minute time frame, and I'm staring at QQQ the same time it's taking place. And it's just a clear 2-minute downtrend, lower high, lower low. And as soon as I see this lower low, and then these 2 green candles and the increase in bull volume, I say, okay, I think that's our higher low. So I enter right then and there, market buy, probably filled 588, 589, and then my stop goes under 583. If I stop out, I am wrong. It is not a bull flag. If I don't stop out, we break the high of the day, and the trade is worthwhile. I then quickly exited half right under the high of the day, just in case, to be a risk-free trade at that point. And then from there, exited the rest, I forget where, at a daymaker level. A little bit early, 592s, 593s, and exited because it was a daymaker, and I was ready to move on to the next trade. Wasn't confident that that move was going to last all day for the Tesla bulls, and Tesla is a current possible daily bear flag. Tesla bulls are not positioned well whatsoever if we see broader market weakness, because a lot of our growth names have been bouncing for 3 days, 4 days, and Tesla just started the bounce today. Next trade, I made a handful of break-even trades as well, along with some decent winners. I had a Riot bearish trade, rising wedge on the 5-minute time frame. Why was I looking for a rising wedge? Big bull day, up maybe 8-9%, no hourly consolidation, but most notably, bull breaks with a lack of follow-through. If we are due for hourly consolidation and you start breaking bullish and you don't follow through, look the other direction. And here we had a high of the day by 4 pennies. That's when I started paying attention. And when we got the new high of the day by only 2 pennies, I then made a bearish entry. I got filled, not very liquid, but I got filled maybe 26. I think I waited for this Now 26.64 was my fill. Exited half, 26.41 to be risk-free. And then scaled out from there in little pieces. And definitely exited too early. The lesson there was leave a runner. Although we did bounce 4% as well. I exited, by the end of it, I was all out right around 26. So definitely left money on the table as QQQ rolled over and magnified that rising wedge bear break significantly. So the lesson for me there was leave a little runner, leave a third position. But overall, that was a decent little win. Failed trade. And again, when you have a failed trade and the result is break even, that's ideal scenario. So we had a PLTR cup and handle on the 5-minute time frame, bull correlation to QQQ. And what I'm doing a lot more recently is only looking in the direction where the correlation is showing me. Because there'll be many times where, NIO will have a bullish correlation with QQQ and it'll be way overextended. And I just want to short it because it's so overextended. But I'm finding my win rate is increasing by being disciplined and saying, okay, I can very clearly see today being the key word because these change every day, these correlations. But I can say today we have a bull correlation, PLTR and QQQ. I am only looking bullish on PLTR as long as that is the case. And that just eliminates half the equation. And it makes things a lot more simple and it allows you to focus in on one direction and trying to establish a trade game plan on that direction. So here was an example of a 5-minute cup and handle, double top at the high of the day, 5-minute bull flag, back testing and holding EMA 12 support, and it was right around here. And a member, PBG, I've never tried to say your name. There's PB and G in it, but shout out to him for posting the cup and handle because I saw this little grind and I said, okay, good enough for me. I'm in 21.42, stop at 21.35. Let's see if it's a cup and handle. At that point in time, QQQ was forming the equilibrium. And I was looking for a 15-minute higher low to align with my bullish entry on PLTR. And it did form right here. We got a little bit of follow through, which broke resistance on PLTR. And then it was a failed follow through. If you are not watching QQQ and you're trading that pattern, you're saying, oh, what a fake out. A member asked me, what is my profit taking target on a bull break at 21.52? And my answer was, that depends on QQQ. If QQQ breaks this 15-minute equilibrium bullish, right after PLTR confirms a cup and handle, PLTR is going to get big time follow through. If it doesn't, if it rejects from 15-minute resistance and stays range bound, I'm going to exit half of my position. So I exited half of PLTR in the upper 2150s and left the other half stop right under 2137. In the end, stopped out, uneventful trade. Not notable in any way, aside from the fact that it was a failed trade that did not result in any loss. And it was recognizing the QQQ setup and the relationship between it and PLTR's setup that had me ready for the potential of a lack of follow-through. What else? Still in ARC, I didn't trade that today. There were a couple other trades in there, but that's all for the notable trades. I failed at something. I did trade that QQQ dump. I tried a Riot bounce. We'll go over that failed trade. QQQ. So this is an example where, I'm looking at this QQQ dump and I'm saying I have no interest in playing this bounce. No interest in playing it, no interest in playing it, no interest in playing it. All right, if you're going to give me a 5-minute and a 2-minute waterfall, RSI on the 5-minute and the 2-minute time frame down in the teens, and most notably, the Nasdaq futures chart looking for the potential of a 4-hour higher low in extreme short-term oversold conditions. Obviously, at this point, we have broken that support, but at that point in time, it was still support, and we were just way extended heading into it. So I said, all right. And that helped me nail the bottom. And I started scaling in right around 323. And I only got one scale in, and then the bounce was underway. Exited a little bit, 323.40s to be risk-free. Exited the rest before I went live streaming at the end of the day in the 323.70 range. Another little small win. But the only reason I nailed the bottom is just because I had no intention of playing the bounce. If I'm sitting there saying, all right, I'm playing this bounce, and I'm starting to scale in once we hit 5-minute oversold, I start entering way too early. So being really picky until things got their most extreme helped me not enter too early. Riot, I attempted a bounce after this bear break due to the 5-minute waterfall. And a break at 25.65 is when I started scaling in a bit, and it just got too beat up for me. And then I focused on QQQ because I said, I'm not going to try and play the less liquid Riot name that I have less experience trading. I'm going to eat a loss on this and then focus on playing the QQQ bounce. So I scaled in maybe 25.60, 25.50, and then we dropped another percent, and QQQ was still free fall at that point. And so I just said, all right, that's the max loss there that I want to take on that trade. And it was probably a half-day loser. But just entering too early, that's another reason that helped me from entering QQQ too early, was I was too busy entering Riot too early. So that was a factor. All right, excited to see what tomorrow and the rest of the week brings. It's setting up to get interesting. And if we set tightening daily ranges and don't break them over the next 3 days, we know next week is going to see volatility. Just like we knew today would likely see volatility. Do good things. See you soon.